Hey guys, welcome to Joy of the Trade. This week I'm doing a buy it or burn it on the bank stocks in the US on the back end of the big JPMorgan earnings results this morning. So, just to get you guys all caught up to speed, JPMorgan, one of the largest banks in the world, one of the most important banks in the world, and full disclosure, probably one of my favorite US banks, reported record profits where they made 20% more on their trading than they did the year before, which was pre-COVID, which is amazing. They made nearly $6 billion in just trading profits, JP Morgan, this quarter. And so typically when you have such a kick-ass number and you beat on all these metrics, you made record earnings, you'd want to see the stock continue to go higher after this big, strong move that it's done. But this morning, as I'm filming this, and things might change, it's a market, it's a fluid situation, JP Morgan's trading down, and as are pretty much the entire banking sector in the United States. And so for me, I want to walk you through a trade that I really like right now. And JP Morgan's involved in it, but it's not the center of it. And it's my buy it or burn it is a money link trade that I actually have recommended just this week. That is buy XLU, which is a utilities ETF, and burn the XLF, which is the bank ETF. And I prefer to play, if I'm going to do the short side on banks, I don't like to do individuals unless it's a terrible bank. So I'm a little bit bearish in the very short term on the entire sector. So I chose the XLF ETF rather than just single out a bank. There are periods when banks are in deep trouble, and then I'm going for the weakest sister. It would never be a JP Morgan. It would be more like a Wells Fargo. But in this case, buy XLU, burn XLF. Let me run you through the charts that I'm looking at right now. All right. So this that I have up here now is a little bit of a comparative. It's a comparative chart, and it shows the returns in these different listed ETFs. This is a great Bloomberg function. You can put any day and time, and it'll show you the return, total return, annualized return. And so the day that I chose was the election day. So since election day, and Joe Biden obviously won, and then we've just recently had a Georgia Senate runoff, the XLF is up 26.6%. 26 in a little over 2 months, which is annualized a 240% return, which is unbelievable. That is a couple of standard deviation from a normal move in the XLF, I promise you. In the meantime, S&P was strong, and XLU, the XLU here, was weak. So why is that? That's because interest rates have started to go up. Interest rates have started to go up. So let me show you something here. And when interest rates go up, banks make more money. But 26% in 2 months is a bit too aggressive. So the interest rates in the same period of time have gone from 90-ish basis points to 111. So 20 basis point rise. And you see this move in the XLF here, where the stocks in that period of time were trading in the mid-20s, now back up here at $31 as the yields have gone up. Not crazy. Look how much they came down, right? So the stocks are back around where they were. The stocks are back around where they were when the 10-year bond was yielding over 1.4%. So we have a ways to go to get there, but the stocks don't care. They're there anyways. So for me, that's a red flag that it's gotten way too crazy. It's moved way too far too fast. It's what markets do. They overshoot in different directions. And another aspect that nobody's really talking about, and they should be considering this, is that a democratic regime is never really nice in the short term, in the beginning specifically. And I want to really wait to see for the banking sector. They're much more in favor of huge bank regulations. They're in favor of banks having huge asset reserves. They regulate trading. They fine banks. If you'll remember, under the Obama administration, Eric Holder with the DOJ launched many lawsuits against the big banks, including JP Morgan, to the tune of $80 billion total dollars. And it kept the stock suppressed for a long time, even as the stock market was ripping up to the upside. So This is a conservative buy it or burn it, and it's a shorter term trade. It's not forever. Buy XLU, utilities ETF. And you're saying, why XLU? Well, utilities tend to do better when yields start to go down a little bit. And I think the yields have gotten ahead of themselves in the short term. Again, this is short term, buy it or burn it. And burn the XLF, which has run 26% in 2 months. Could see a pretty decent pullback, I expect, in the next coming weeks. LFG, guys, if you want to learn more about how to trade pairs long short, check out my Money Links website. I have many trades. I do about an average of a trade a week, and we do single stocks. We do ETFs. It's all very simple. Check it out. LFG, guys, I'll be back soon.